John says, how do you select which stocks to short with naked puts? How do you evaluate that? Okay, well, this is what the Power Options tools are for. In the search tool, there's a variety of default criteria, whether you want to do monthly, whether you want to do weekly, and we also have the picks of the day. Now, what I'm going to do first, John, is we're going to go just right into the search tool. I'm going to take a quick look at all of the various criteria. Not for the weekly picks of the day. We're going to ignore all of my things here. Okay, so I just want to go with, okay, I'll start with tip sheet out of the money puts. Look at some of these ones that come up here. Hess, United States Oil, Valero, Conoco, Phillips, Piper Sandler Company, I'm not sure, Mohawk Industries, the S&P oil and gas production. Why are these coming up in the list, John? Well, what this search is looking for is common option criteria that we would look for both for the stock and for the option. Now, that's what the Power Options search tool is. It allows us to put in these criteria for different things. This one is pretty basic, but what are we looking for? We're looking for relatively even days to expiration, both weekly and monthlies if they appear in the search. We want to be at least 15% out of the money, an option bid price relatively greater than 20 cents, and keep the bid-ask spread. We're looking for stocks above the 50-day moving average and stocks between 15 and 150, assuming total cash secured so that you don't have to put up too much premium. Now, I don't know your account, Johns, and I know some of my clients' accounts through discussions. I have naked put sellers in this market that are doing stocks that are up at the $500 and $600 range. Now, that's too rich for my blood. I usually keep this search, the covered call search, the collar and the married put search, when I'm going to be totally cash secured or buying those positions, to about $85 or $90 maximum. That's just me personally, based on my account side. There's about 15 to 20 different criteria that you can use, but this makes sense, doesn't it? What do I want when I'm trading a naked put? Is it all about the premium? Am I looking for the highest implied volatility to get the best return? Well, in theory, yes. But it also has to be a stock that I would be comfortable owning, is in the trend that matches the strategy, neutral to bullish, has been moving up in price. Why am I only seeing oil stocks here? And energy stocks, and of course, Darling, which is a strange one. But it's because these are the stocks, these are the securities in this market right now. They're still up above their 50-day moving average or match other criteria. Yes, I still want a good return. Yes, I still want to be under 60 days out in time, preferably only 20, 25, 30 days out in time. Weeklies are okay too. And I'd like to see at least a 2% yield, but the stocks that are in the uptrends right now, the stocks that have been moving up, have a relatively lower implied volatility than other stocks like Coin, which I would not do a naked put on right now. I have no idea where that stock's going to go. Are the premiums awesome and fantastic? Absolutely. Do I think 15% out of the money for even a 30-day trade is a comfortable enough cushion for something like Peloton, Coin, or one of those pandemic darlings we talked about? Personally, no. I don't know where the bottoms on those are, and I'm not going to be lured in by a high implied volatility just for better bang for the buck on a stock that does not match my sentiment for the positions. Now, we'll take a look at the search results in a moment, Johns, but I want to describe a little bit. What are these monthly picks of the day and this weekly picks of the day? Well, a few years back, what Ernie did is he ran various iterations of search testing on covered calls and naked puts, monthly and weekly for both strategies. And with all of the criteria that we have available, we'll take a look at in just a moment, he ran different iterations looking for things that were in just a specific stock list. Stocks that match certain technical and fundamental criteria, shifting technical and fundamental, looking further out of the money, looking for higher premium and higher volatility, and would run the test with stop set, as I mentioned. If the stock fell maybe 7 to 10%, or if it reached within 1% of the short put strike price, where the position would just be closed and then managed. And he ran each of those iterations and just tabulated them. Then our system sort of spits out, not the one that's on the website here, but one we have in the background. I'll show you that in a moment. But it spits out the results of wins versus losses, starting with an account size of $100,000. How did it end after this 6-month, 8-month, 1 year, 16-month period, 18-month period, for example? Okay. And what you're seeing here are the results of that testing and the results of the return. So he has it here, 24. This is the monthly, of course, over a 12-month period. So 24 positions were found because you only use the top 2 each month. Equal dollar amounts are selected, and over this testing time period is a 33% return with a 83% win rate. That's not current. That's not since January. This probably only has, I'll be honest, this only probably has a 60, maybe 55% success rate since January of 2022. It wasn't the right market. Maybe in the first part of March it was. But with the types of declines we're seeing and the type of volatility we're seeing, you want it to be protected in a naked put position, maybe in a type of debit spread or credit spread, so you could control the losses better, or been doing bearish positions naturally. But that's how these came up. The weekly is the same idea, just using the shorter term weekly options. So what is different between some of these searches? Here's that tip sheet out of the money puts, looking deep out of the money, still with a good reasonable return, under 60 days out in time. It makes sense perfectly why we're seeing these types of stocks here, because that's the direction and the sentiment right now of this strategy, a neutral to bullish position. The monthly picks of the day, similar criteria. It's just going out to the standard expiration, not looking for too high of an implied volatility to get lured into those risky stocks that have something coming up. Looking for stocks in an uptrend, but also part of a specific list. And of course, 6% out of the money, or more, minimum bid price, and controlling the bid-ask spread. Other technicals that can be used. Average stock volume. You want to look for higher volume stocks per day. It's measured in thousands. So if I only want to see stocks that had 1 million shares on average traded per day, I'd look for a filter here of average stock volume greater than 1,000. RSI levels. You don't want to trade a stock that's near 70 or 80 RSI because you use that as a signal for yourself. When's it going to decline? You can absolutely put that in. Bollinger Band and Bollinger Band ranges, MACD, number of days of stock above a 20-day, 50-day, or 100-day moving average. This is a monthly search, just like that out of the money tip sheet, John, that we were looking at. That's why we're looking for stocks above the 50-day moving average. Now we go to the weekly picks of the day. Okay, and there's more than I would think here. And these are a little bit, see, this one I probably personally wouldn't do. It's got a 3.3% yield for 7 days, a 68.5% probability above. I'm not comfortable with that, and I'm not sure what this is going to do. But hey, it's up again another 2 points. It was down near just below 8. I think it hit $7 and something recently, and it's shown improvement. But I'm just not sure. I don't know if I trust it again. Not that I've ever traded it, but just from the discussion we had at the beginning of the presentation, John. What are we looking at here? Similar, at good average stock volume, stock above the 20-day moving average. All of them, no earnings between now and expiration. That's not what I want with a naked put or covered call position. I don't want that extra surprise. Earnings per share growth greater than 5%. To look for a good management or good show of growth, even in recent times, stock price between 9 and 200. But again, the fundamentals and technicals that we have, you can change based on your needs. Market cap is in there too, PEG ratio, earnings per share growth. We've put our foot forward. What you're seeing in the default searches in any strategy here on Power Options, including the naked puts, is where Ernie, myself, other staff members, where we would start if we were opening a new position today. Doesn't mean I'm going to take the top 2 from this list and just go trade them. I'm going to research and analyze the positions using that more information button. I want to take a look to make sure things are matching the sentiment for the position, even if it is a weekly. Oh yeah, it's had 2 days of movement. I don't know if I like the trend of this one. It hasn't been holding up as well. It's just had a recent move. I don't want to see what that recent move was on this position, this Bumble position. Is that what this one was? Yeah, Bumble. Was that earnings related? Do I feel comfortable with it overall? Do I feel comfortable with the market overall to open naked puts? It's okay to shift strategies and say, you know what? I like selling puts, but I don't think I want to take the risk right now in these markets. I think there's still more bottom to be seen. Maybe I'm okay doing a bear call credit spread, or maybe better, a bear put debit spread on something that's been driven down, something that's been falling. Hey, maybe you have a sentiment, of course, I particularly don't, but you have a sentiment that some of these energy companies are going to change direction. AMD bounces around a lot, but it's been strong for the past 5-6 days, I believe. There's not a recommendation or suggestion. Oh, I thought it was high. It was 2 weeks ago when I saw it moving back up towards 100, and then it fell with everything this week, but it's coming right back up to that price. It has a positive MACD that's below the divergence. It is above the SMA 20 now after today's movement. So I'd have to decide, do I think this movement today was reasonable? I want to check the other two. Scorpion, I was following the tankers for a while. Yeah. So that's something that's been matching the trend. The tankers have been doing really well, although the two I usually look at, Diana Shipping and I believe Eagle Shipping, I don't think they have as strong a chart as this one is Scorpio tankers. And that might not even be a tanker company I'm thinking of. That could be related to trains, but I think it's a bulk shipper. And Devon Energy, I want to take a look at that one. Yeah, that's more along the trend that I want and what we expected with the out of the money. I want to go with the trend normally with this type of strategy, even if I'm only doing 7 to 8 days out. I don't want a bottom feed. I tried that when I put together the criteria for the bull put credit spreads, finding stocks that were bottom feeding in a down market. Do they always come back up? No. And we've all seen that and had that reinforced in the last 2.5 months. Bottom feeding sometimes is a dangerous idea, assuming that the stock is going to recover when there's more downside that can still be had. These are not recommendations or suggestions. I want to make that clear. This is our best foot forward. Yes, our best foot forward on what we would do if we were opening a position today in the right market conditions. I'm not just taking the top 2 or 3. I'm going to do some more research and see a stock that I like. And I could be wrong on a hood. I could be. This stock could impress me. In the next 30 days, it could be back up to 12. It could go to 14. It could go to 15. And I missed out on an opportunity. But you know what? If I'm uncomfortable with it, is it worth taking the chance? No, I'd rather pick something I'm more comfortable with, a little bit more stable, that I don't have to watch as frequently. Yes, I'm going to set my alerts. I don't set, to answer a question directly, a gentleman asked me this during a coaching session. We were talking about triggers and stops for strategies. And he asked me, do you put a hard stop in with your broker? And the answer is no. And the main reason the answer is no is, number one, I have the advantage. Sorry, not the advantage. I have an advantage. This is my job. I'm here all day with 2 screens in front of me, writing webinars, writing other content, handling coaching sessions, doing things of that nature. So I have the screens in front of me. If an alert is triggered on the Power Options portfolio, that's where I set my alerts. It'll notify me. And if I'm not on a coaching session, then I'll go over to my broker and I'll put in my order to close the trade. Because the 2 brokers I have, I don't know if it's there, but I haven't seen a way to put in an order where you could put it in at a limit order at midpoint. It's just a market order, and I don't want that. Especially with what I had been trading up until about January, tried to trade it again in February, and I'm by up until January, I mean for the past 5-6 years. The bull put credit spreads we like to use, the 2-week out bull put credit spreads, they're shorter term and a smaller net credit. And again, I ran these tests similar to how I discussed Ernie did the naked puts. Again, I did not trade these in January, tried a couple in February. I think I tried a total of 5 or 6 in February, had to manage 2 or 3 of them. It's about 50% I had to manage because they were going against me. We used the pendulum adjustment and still got out with a profit on those. Didn't touch them in March and missed out, but thankfully did not touch this in April. Didn't go back to it. I just didn't trust the market, and it was a good thing not to. These were not the strategies. Bear put debit spreads have been working much better. But what are the kind of stocks we're seeing that match the criteria here? Stocks above the 20-day moving average, positive MACD signal, no earnings between now and expiration, good probability and a good return. And we see some of the same positions that you'd see in the naked put position. Phillips, Devon Energy, Valero, and then we see some common names. AMD is up here again, but 3M, FedEx. You're not seeing a lot of fly-by-night companies you haven't heard from in these searches, because right now the stocks that have been holding with still a positive MACD and above their 20-day moving average are the energy and the more common name stocks that adjust to that. Sudhanshu says, for weekly covered call, are they really recommended as per the short and long-term trend, or one needs to do their homework and be careful? One needs to do their homework and be careful. As we talked about, I don't know if you were here in the beginning, as we talked about with John, the criteria that we've set are based on testing and what we would use as a starting point if we were opening a covered call or naked put today. You just heard me say that I'm not trading any covered calls personally or any naked puts. Might be missing opportunities, but any new position I enter now is going to be done as a married put or as a collar for the guaranteed protection. Guaranteed, locked in, not like a stop order that can get away from me. It's locked in where I can only lose 4, 5, or 6%, usually less in that position. Okay. And then he says, you're trading CHW as the recommended covered call. Okay. So again, as we discussed, you said weekly? Oh, CWH. Okay. So again, these are not direct recommendations or suggestions, Sudhanshu. What this is our best foot forward. Let me go to see how we develop these results. And what you want to do is give this a read if you haven't yet. This talked about what Ernie's process was for the testing, what he looked for, and it was probably, okay, I'm sorry, it was probably about 75 to 80 different iterations of covered call searches, in the money, at the money, out of the money, looking for more fundamentals as opposed to technicals, looking for more technicals as opposed to fundamentals, using a 1% stop, using a 10% stop if the stock falls 10% or 15%, and then running each one of those criteria ideas over time during a testing time frame that was up and down and up and down. The results that you see there on the weekly covered call quick link that is only run at 1 o'clock in the afternoon, I think 11 o'clock for the monthly, I could be wrong on that, we'll check in a second, are the criteria that showed the best return and highest success rate over the same time period that was tested from the other ones. But in general, okay, this was the market condition at that time. Neutral, a little bit of bearish, comeback, recovery, neutral, bearish, comeback, recovery, neutral, in that case. Is that where we are right now? Well, not exactly. Let's go year to date here on SPY. I know you know what we're looking at, but is this a type of stock trend? Is this a type of stock chart, excuse me, Sudhanshu, that you would look for when trading a covered call position? Does this make you comfortable to trade a covered call? Don't worry about the numbers, just the overall trend of the stock. To me, this is not. And like I said, I didn't trade any bull put credit spreads, even with my preferred criteria in January. Started to do a couple in February, ended up having to manage 2 here. Two here. I managed 2 here, had 3 profitable here, entered into 2 more, had to manage 1. 1 did up successful. So that's 3, 1, 5, 6, 7. Okay, 7. So I had to manage 3 out of 7. That's what it was. I remember it now. I had to manage 3 out of 7 bull put credit spreads, and then I stopped. And I missed out on March, and I haven't traded any here. What I did do also here, these were bear put debit spreads, a couple bear calls. This has been some bear put debit spreads or buying puts and legging into a bear put debit spread position. Again, I don't know if I trust this as a signal that this is going to start doing this right now. Anything I open now is going to have a guaranteed floor, okay? But to answer your question, yes, if you think it's going to, it's our best foot forward, as we discussed for John, of what we would use for a covered call criteria or naked put criteria if we were personally opening up today. But you have to feel that the market is going in the right direction as well as your stock to do these positions. Oh, okay. So now she says, yeah, additionally, I appreciate the help on doing a protective put to cut the loss 10%. Absolutely. That's another thing that Ernie mentions. Is it here in this section? I'm sorry, I know it's here somewhere, but he does make that same suggestion that, oh, there it is. Consider a 10 to 20% OTM protective put for biotech or higher risk and for riskier markets.